It's time for Real Talk with Brian and Dan, the weekly talk radio show dedicated to discussing important real estate topics, plus insight into the local community. With a combined experience of over 50 years as local real estate brokers from the Eastside Real Estate team at Keller Williams Realty Bellevue. Here's your hosts, Brian Levitt and Dan Edwards.
Well, good afternoon, Brian. Look at this fantastic summer day.
Yep. Very high humidity. We see it falling down from the sky.
Heck? Yeah, Eric's weather report was a little dismal. I guess it's going to be raining tonight, huh? All right. Well, welcome to Real Talk with Brian and Dan on 1150 KKNW. It's Wednesday, July 17th. Thank you for joining. Thanks for listening today. Now, if you'd like to listen to any of our past episodes, you can always find them anywhere podcasts are casted. I don't know if that's the proper term.
Yep.
But it's going to be a doggone good show today, Brian. You know why?
Tell me.
Well, we have two fantastic guests, John Knuth with DogSmart and Amy Jean with House and Hound. But before we get to our guests, let's start with some real talk.
Okay, last week we talked about how having a professional on your side can make all the difference. Today we're going to talk about why, from a financial standpoint, owning a home is always better than renting one. In a recent research paper, Homeownership and the American Dream, Laurie S. Goodman and Christopher Mayer of the Urban Land Institute explained, homeownership appears to help borrowers accumulate housing and non-housing wealth in a variety of ways, with tax advantages, greater financial flexibility due to secured borrowing, built-in default savings with mortgage amortization and nominally fixed payments, and the potential to lower home maintenance costs through sweat equity.
So, Brian, we were talking before the show, as you look about the things that were outlined there, that's pretty meaty, right? We can go one by one. But let's first off, tell me, when you finally decided to stop renting and purchasing, how many eons ago was that?
A lot. I was 22 years old, and my roommate was a young aspiring realtor, and I was a deputy sheriff. And at that point, I think he wanted to be a deputy sheriff, and I thought, hey, that realtor thing looks pretty good. So I bought a house, and it was a cosmetic fixer, just a little.
Where was this?
It was in Stockton, California.
Okay.
I was a deputy sheriff with San Joaquin County Sheriff's Office, and bought this house, little sweat equity, paint, carpet, and a couple dumpster loads of trash. But cleaned it up, painted it up, and I remember sitting on the couch the day I moved in, thinking, $174 a month. What on earth was I thinking? How am I going to survive? So times have changed a little bit. But I think the good thing for me was that was a foothold into wealth accumulation. I sold that a few months later, made a tidy tidy is a relative term. I made about $5,000 on a $28,000 house.
Back then, you could buy a loaf of bread for a quarter, right?
Yeah, gallon of gas for a quarter, yeah.
But $5,000 is a lot of money.
Yeah. And I reinvested. I did it again, and that really led to the career in real estate started as a flipper.
So that's the funny thing, as you look at the study that we quoted earlier, it's borrowers accumulating not only housing but non-housing wealth.
Right.
So I mean, that was the instance. Is you had to live somewhere, right? So you were paying rent to somebody. That's my guess.
Yeah.
So now you're just ending up in a situation where at the end of you sold it in a year.
Less than a year.
Yeah. And made some money and then parlayed that into another house.
Yep. And did that again and made more the next time and just used that as stepping stones. It's interesting. I had an interesting conversation with my oldest son, who's very analytical, really smart guy, and his question was, "Am I better off putting money, into a stock fund or buying a house?" And he's doing the analytics, and I'm thinking, yes, you should put it in stocks if you can make the right pick.
Yeah.
For example, Amazon before it launched,
yeah.
You'd make more if you put your down payment into that than into a house. But a home also becomes, in essence, a forced savings plan,
right? Because
you're going to pay, you're either going to pay rent or mortgage. So for most people, they're going to have more luck buying a house than with that stock pick.
Yeah, according to this, a built-in default savings plan with a mortgage.
Right.
The funny thing is people don't realize that paying a mortgage payment, especially the first couple of years, there's a lot of interest going in there, right? Which is a deduction, in that regards. But then you also pay a thing called principal.
Right.
Principal is another word for savings.
It is.
Right? Because you're actually paying money to yourself to sit in the house.
Yep.
So one of the things that homeownership allows households is the ability to amplify their appreciation in their home values by a factor of, maybe 20%. So how this works is when you go to buy a house, you're not actually putting $500,000 down. You're putting 20% of that.
Right.
But your appreciation is on the $500,000.
It's on 100% of value,
Yeah.
not on the down payment that you put in. That's one of the secrets of leveraging a home. And I'm a guy who's, I really don't like debt. I coach my clients on eliminating debt, but home ownership, you're going to typically far outweigh the disadvantage of the debt by the appreciation and by the satisfaction of ownership.
So, ask me about my first house.
Let's hear it.
Okay. So I actually had an opportunity to buy a house in downtown Seattle, 85th and Roosevelt. So that's in Maple Leaf neighborhood. And I was living there in this house paying $235.50 a month with three other roommates. Right?
Sure.
Yeah.
Yeah. And
Really cheap.
what did I do?
Yeah. And so I had an opportunity to buy that house for $220. I did not. I passed on it. I chickened out. Partly because my wife was like, no way in heck am I going to live there with your three other roommates. So if I wanted to marry this woman, I was going to have to buy something for real. But I did end up stretching, right?
Sure.
What I did was for the 6 months leading up to us actually finding and buying that house, I pretended like I had a mortgage already.
Oh, interesting. Yeah.
So instead of just, paying that $237.50, I was actually paying $2,500 a month into a savings account.
Smart.
That way, when I finally had that down payment saved, I was already used to paying that monthly mortgage amount. So it made it a little, it still feels the same way. And I know there are first-time home buyers out there that as they've just finished the transaction or they're considering it, they're trying to wrap their head around their new mortgage payment and what that's going to look like.
Yeah.
And so there is an adjustment period. It takes some time.
Yeah. And, a lot of people, we talk about payment shock, but one of the things I explain to people is you have a significant tax advantage. So buy a home, give yourself a raise. Most people are finding that going from a situation of not owning a home to owning a home, you can decrease your withholding and thereby increase your cash flow.
Brian Levitt is not a CPA. Please check with your CPA.
Please check with your tax advisor.
No. Yeah. But of course, when you look at that W-4, when you fill it out, one of the things on there is a deduction, and a home is considered a deduction for tax purposes.
Right.
But anybody should always consult their tax attorney about how to do that.
So something else people don't realize is that you're paying for housing whether you own or rent. So you're either paying your own mortgage or somebody else's. Some people argue that renting eliminates the cost of property taxes and home repairs. No, you're paying it.
Yeah.
That's always going to be included in the rent that you're paying. Every potential renter must realize that all the expenses landlord incurs, property taxes, repairs, insurance, etc., are baked right into the rent payment already, along with the profit margin.
Yeah. So when you're coaching an investor that's going to buy an investment property, are you saying, "Oh no, don't worry about these repairs, don't worry about the taxes, don't worry about that"?
Right.
No, you need profit on top of that.
About all of it. Right.
So they're not only are they actually paying those things, they're also paying margin.
Right.
For profit.
Yeah, and you look at how rents are skyrocketing. One thing about ownership is you've got a lot more control over that, in that the only thing that typically increases, if you have a fixed rate mortgage, your taxes typically go up some, insurance might, but it's so much less typically than you'd see in the rising rents that we're watching here in our marketplace.
Yeah, and there are different strategies. We're going to have a mortgage moment, so we'll talk to Michael, our lender, about how that looks as far as from a mortgage standpoint. But I got to tell you, rates are really, really good right now. So I can't urge folks enough to find out, right? Renting may be right for them right now, but chances are in the current environment that we're seeing, it would behoove you to find out the facts and determine it.
Everybody's situation is different, but over the years, one of the things I've seen is I'll have some clients, some buyers that say, we're going to hold off for now. We want to save a bigger down payment. What I've seen time and time again is people can't outpace the market by trying to save a larger down payment. With appreciation, and like right now, rates are so low that a person typically trying to save that bigger down payment is going to be outpaced by appreciation and the threat of rising interest rates.
Yeah, it says right here that homeowners that actually own have a 44 times greater net worth than that of a renter. So it's estimated that a family buying an average-priced home, this is across the United States, maybe not here in the Northwest, but an average-priced home across the U.S. This past January could build more than $42,000 in net wealth over the next 5 years. House values, rents, they're going to go up. Inflation will probably go up, and interest rates at some point are probably going to go up. So when you choose to purchase a home, you're locking your purchase price in time, and you're locking the price of money in time.
So kind of wrapping this talk up, I've been selling real estate way too long. I'm 36 plus years in, and I'm really blessed to have done so very well. But the majority of my wealth is in the real estate that I own, not the commissions I've made. I mean, I look at my net worth, and really it's the real estate that I own that's really carried the ball. And again, I've done great in terms of the real estate sales, but that's not where the wealth was built.
Yeah, so if there's listeners out there that already own a home, and they're looking at figuring out a way to kind of take that notch up a little bit more, Brian and I would be happy to talk to you about investing.
Yep.
Yeah. All right. Well, that includes our Real Talk segment. Like I said, after the break, we're going to have our mortgage moment. We're going to have Michael Burdick coming back with us and two fantastic guests. So come on back after this short commercial break.
Not sure if now is the right time to sell? Worried you missed the market? The Eastside Real Estate Team specializes in helping homeowners maximize their equity when selling. With our proven premier listing service, our clients have sold their homes for more money in less time than the competition. We know you have many choices when working with a real estate agent, but with the Eastside Real Estate Team, you get a team of highly qualified, experienced agents. From staging to deciding if your property is market ready for top dollar. If you're considering selling, call the Eastside Real Estate Team at 425-200-4093. Or check out our website at theeastsiderealestateteam.com, a subsidiary of Keller Williams Realty in Bellevue.
Are your dog's behaviors not quite what you'd like them to be? You're not alone. DogSmart is committed to helping families just like yours learn ways to communicate with your dog so that both ends of the leash are working as one. They've helped countless families on Seattle's east side and beyond. Don't waste another moment. Reach out today. To learn more about how DogSmart can help or to schedule a time to meet, visit their website at dogsmartseattle.com or call 1-833-DOGSMART today.
Seattle, Tacoma, Antwerp? That's right. We're streamed worldwide on our app and on the web at 1150kknw.com.
The last couple of weeks, you guys are all wondering what the heck is going on with rates and with the mortgage market. Well, during this segment, we like to get a quick update on the lending side of the home buying process. Today, we're talking to Michael Burdick from Loan Depot. Michael is a loan consultant with Loan Depot and has spent the last 10 years serving clients all around the east side and greater Seattle at a very, very high level. Welcome back to the show, Michael.
Hi, guys. Thanks for having me again.
Michael, how have you been? How's business?
It's been good. You know, we have seen, just like we've talked about for the last month or so, that interest rates have been very good. So it's always a good time to reach out to your mortgage consultant and just do a review with them. Had some lucky clients that locked a couple of weeks ago that got some rates that I haven't seen for years. They've since adjusted a little bit, but overall are still very good interest rates right now.
I mean, essentially that means your dollar goes farther, right?
That's a big part of it. And then also, you know, reviewing your current loan. You know, some people have higher rates and maybe they have high interest credit card debt that we can just overall get their total financial picture and a better overall payment. So that's a big part of it too.
Now, we recently talked about a type of approval that you, through Loan Depot, offer called Day One Certainty. What is that?
Good question. So we have talked about this, and Day One Certainty it's not a Loan Depot product. It's a Fannie Mae, Freddie Mac approved product that lenders can get approved to offer. And this is something that we were one of the early adapters getting. And basically, when I get an application or somebody completes it online, it will verify their employment, verify their income, and then they can also allow us to verify their bank account information with their you know, balances and things like that. So really it helps eliminate the amount of documentation they have to provide. But something that really makes it cool about Loan Depot is what we've put into our application. And I run the Day One Certainty, and it does a full review of the two investors of Fannie Mae and Freddie Mac, and then shows me which results are better so I know which way to invest that loan. And ultimately, it can get me income verified, assets verified, and an appraisal waiver. So it's basically a cleared to close loan right there on the spot.
Day one.
Awesome.
Day one. Michael, why is that important?
Well, it helps streamline the process because, when people are making an offer on a house, sometimes they want to get that approval quickly and they'll complete the application. And if you go to an older bank or credit union that doesn't have the technology that we have, they're going to say, okay, thanks for completing the application. Here's the list of documents I need. Some people have a lot going on because they're busy at work and, they'll take weeks to get that information because their tax returns are stored away in their attic or we hear every excuse there is. But for me to come back quickly and tell someone that we don't need anything from them, literally, then, they're usually pretty happy to hear that.
That's awesome. So I also heard a big change and competitive advantage for Loan Depot that you've started is called Straight to Underwriting. We got about a minute. Tell us what that's about and why it will benefit the borrower. Yeah,
so this is something that we started doing really a couple months ago, and we were one of the pilot branches or our area for the country. And typically when a mortgage company gets an application and they get the documents and then they submit it to their underwriting department, it goes through a number of steps, and it goes through disclosures, it goes through a processing department that scrubs the file, and then it goes to underwriting. So each one of those steps has turn times. But what we've done is we're now disclosing on our side as the originator, and then as long as we have a complete file, it's going to go straight to our underwriter. So we're eliminating the processing turn time, and what that does is it allows us to get approvals much quicker than what our competitors are doing right now. So
Michael,
it's been awesome.
Yeah, great information. Hey, how do our listeners get a hold of you?
Google Michael Burdick Loan Depot out of Bellevue.
Google.
Best number for me. Yep, Google 206-661-2289.
Sweet. Excellent. After our break, we will be visiting two great local businesses that the dog owner listeners will enjoy. First up will be John Newth, a dog trainer and owner of DogSmart LLC. Join us right after the break.
Did you know when you pay rent, you're actually paying someone else's mortgage? Are you tired of missing out on owning your own home? Fact: homeowners on average have 40 times the financial net worth of renters. The Eastside Real Estate Team has been helping many first-time home buyers find and buy their first home. They specialize in customer service and put you first. They listen first to what you're looking for, and then they take the time to make sure their clients understand every aspect of the home buying process. If owning a home has been your dream, the Eastside Real Estate Team can help you. For a free, no-hassle consultation, call 425-200-4093 or find them online at the eastsiderealestateteam.com, a subsidiary of Keller Williams Realty in Bellevue.
Are your dog's behaviors not quite what you'd like them to be? You're not alone. DogSmart is committed to helping families just like yours learn ways to communicate with your dog so that both ends of the leash are working as one. They've helped countless families on Seattle's East Side and beyond. Don't waste another moment. Reach out today. To learn more about how DogSmart can help or to schedule a time to meet, visit their website at dogsmartseattle.com or call 1-833-DOGSMART today.